A sock puppet almost destroyed the entire tech industry. And no, I'm not exaggerating. This story gets stupider and more expensive. Imagine waking up in 1999 and every teenager with a website idea is suddenly worth millions. Companies with zero revenue are valued at billions. Investors are throwing money at anything with .com in the name. Even your neighbor's dog could have gotten venture funding if it had a business plan. They said the .com crash happened because of market correction and overvaluation. Boring, technical, safe. But that's just the story they want you to remember, because the real story involves a pet food company that spent more on a Super Bowl ad than it made in an entire year. And somehow that made perfect sense to everyone at the time. Because here's the part nobody talks about. This wasn't stupidity. This was mass delusion on a historic scale. Between 1995 and 2000, the NASDAQ stock index skyrocketed by 600%. Not a typo, 600%. But here's the kicker. Most of these companies didn't actually make money. Some never generated any revenue or profit at all. They were burning through millions selling products at a loss, believing that somehow, magically, profits would appear later. Take Pets.com. They were selling dog food for 1/3 of what it cost them to buy it, then spending millions to ship heavy bags across the country for free. It's like starting a restaurant where you pay customers to eat your food and somehow expecting to become a billionaire. The business plan was literally lose money on every sale, but make it up in volume. Let that sink in. But wait, it gets even more absurd. Venture capitalists were throwing money at these companies like it was monopoly cash. In 1999 alone, VCs invested over $100 billion in tech companies. Companies spent $30 million in marketing in a single quarter while making only $8 million in revenue. That's not a business strategy, that's a cry for help. And everybody knew it was insane, but nobody wanted to be the person who missed out on the next big thing. Money? Then came no warning signs. Interest rates went up slightly in early 2000. Suddenly, investors started asking uncomfortable questions like, do you actually make money? And what's your plan to become profitable? Most companies didn't have answers. Panic spread faster than dial-up internet. Stocks started crashing. Companies that were worth billions became worthless overnight. March 10th, 2000, the NASDAQ hits its peak at 5,048 points. Then it collapsed. By October 2002, it had fallen to 1,139 points, a 78% drop. Over $5 trillion in market value just evaporated. Pets.com shut down in November 2000, just 9 months after going public. They spent $300 million in less than 2 years. Their famous sock puppet mascot sold to a company that sells subprime auto loans. You can't make this up. The irony is chef's kiss. But here's what nobody tells you about this crash. The .com crash actually built the foundation for everything you use today. Amazon survived by a thread. Google launched right into the wreckage. eBay hung on and became massive. The aftermath left telecommunications companies with massive overcapacity, which kept internet costs low and made high-speed connectivity affordable. The infrastructure built during the bubble, fiber optic cables, data centers, technology, didn't disappear when the companies died. So while investors lost trillions, the world got cheap, fast internet and the foundation for every app you're addicted to right now. Your entire digital life exists because people threw billions at terrible business plans in 1999. Here's the lesson. The stock market isn't logical. It's collective madness with a price ticker.
No.
Greed doesn't care about business plans. Fear doesn't care about fundamentals. And when everyone's getting rich, nobody asks if it makes sense. The dot-com bubble proved that you can convince smart people to do spectacularly dumb things if the story sounds good enough and everyone else is already doing it. Finance isn't math. It's psychology wearing a suit. And if you think this was crazy, wait till you hear about 2008, because apparently we learned absolutely nothing.